So, good evening, guys, and welcome to yet another session. As we all know, this is something we always look forward to. We always host this session every week. Every week, we try and then look at certain concepts that are more or less giving us issues in the forex market. First of all, try to decipher them, and then we'll try to learn how to use them to trade, basically, or see if they affect our trading. Now, for the past couple of weeks, so I've been doing this whole thing where we're picking certain concepts that people throw around every now and then in the forex market, things that sound so sophisticated, and then we try to make them not so sophisticated, and then we try to see if we can, if it really affects our trading and if it can really take us closer to profitability. Since we started this stuff, we spoke about things like other blocks, breakers, things like psychological levels, amongst other concepts. And if you missed any of them, you can, for those that are watching this on YouTube, I'll actually drop a link. You can use the link to watch it on the channel. Or for those of you on the session, you can look to join the free community where we post these videos, links for the videos, signals, and then free classes every now and then. You get those videos actually, or those classes that we did are actually very, very important in helping you know these things and then helping you basically decide if you should use them or not. Do you understand? So without further ado, let's get into it and then discuss these concepts and then see what they are. So today, what we're going to be discussing is the whole idea of fair value gaps. Now, this is something that for the longest time now, we've actually been talking about it. And we started talking about it one other time, but then we stopped, and then we decided that we're going to talk about fair value gaps. I felt like I knew what the concept was, but then normal, it's not something I used to trade. You get, so I knew it from the basis of, okay, I know what it is, but then coming to come and tell you guys, okay, this is the thing, and then use it to trade like this to a certain level was me basically, or I felt like at some point I was going to give you guys wrong information. So I've done a ton of research on it, and then I've gone back to like my journals when I first started trading, when I was learning these concepts. I've gone back to look at those key points and then those key those small things you need to actually apply to actually be able to use these things to trade. So today, let's get into it. We've already spent a lot of time waiting for people to join, so let's get into it. So fair value gaps. What's the whole idea of fair value gaps? Let me write that down on our charts. Okay. So fair value gaps. So this whole thing falls under the whole idea of zones. Do you understand? We're using this whole thing basically to know where we're supposed to potentially enter trades from. Now, what are these things? Fair value gaps more or less come after like long or strong impulsive moves in the market. Do you understand? So there are certain gaps in the market where let me more or less show you guys what it looks like. Describing it is a little bit tricky. So I have, can you guys hear me clearly? Can you guys hear me clearly?
Yeah, Scully.
Yeah. So whenever I have like very strong pushes in any direction, do you understand? You would always see those situations whereby price creates like a very strong impulsive move. Do you understand? And then there's hardly any retracement, like the next candlestick hardly retraces back to like fill that level. Do you understand? And then there's like a gap in between. So let me show you guys what I mean. So if you look at this chart, you'd see that we had this whole strong push to the downside here. Do you understand? We had this so strong push to the downside. Now, if you look at areas like here, if you look at areas like here, you see that as price was pushing to the downside, you see that there were candlesticks that were pushing down, candlesticks that were the wicks were pushing up, pushing down, wicks were pushing up. Do you understand? There was no really any gap. But then if you look at somewhere like here, you see that inside this whole push to the downside, we had this whole strong red candlestick to the downside. But then in between that red candlestick, one where price pushed to the downside, this next candlestick came back, but then failed to like retrace fully back up. Do you understand? It just continued to the downside. And then there was that space in between. Like if you see this space in between here, let me change the color of that so that we can see it clearly. If you look at that space in between there, you'd see that there's that whole week that pushed to the downside, and then there's that whole week where the next candlestick pushed the upside, and then there's that gap in between that none of the weeks actually covered. That is what a fair value gap is. Do you understand? So the whole idea is that whenever we have these gaps like this, price tends to come back to these levels to fill them up before continuing in that direction. Do you understand? So if I have like a downtrend, let me illustrate this on the chart. So if I have like a downtrend where price is creating a series of lower lows and lower highs, and then price creates like a lower low to the downside here. Now, inside this whole move, we have that fair value gap somewhere around here. The whole idea is that whenever price retraces back up, price will come and fill that level. Do you understand? Come and tap into that level before actually dropping to the downside. That's what the whole thing is. Are you guys getting the idea? Do you guys see what it is? And then are you guys like, hope you guys are starting to get the whole story about this whole thing. Oh, give me 1 sec. Let me check something about. Good. Okay, someone said no. So let me pick somewhere around. Let me see. Let me go to a recent chart. We hardly had any impulsive moves. Let me use my go chart. As we're waiting for go charts to come, let's come. Let me use another example. Uh, so if we look at this impulsive move here, see somewhere around here. Who said they did not understand? That was oh, this guy doesn't have a name. So now if you look at this, you see that as price was pushing up here, look at this move here from like down here to the upside. If you look at this move to the upside, you see that the move, first of all, was strong to the upside. And if you look at all these candlesticks, most times when price pushed up, you see that there'll be a week coming back, or some candlesticks will come back to the downside to fill all those moves. But then if you look at somewhere around here, now look at this whole place here, from this green candlestick here, from like here to here. You see that there was that gap there where one candlestick pushed to the upside. One sec. Let me turn it to red. One candlestick pushed to the upside, and then price hardly came down to like fill that level before pushing back up. Now, compare this to the other candlestick above here. You see that as price pushed up, this next candlestick actually came down with a long wick to like fill all those levels, and there was no gap in between. Price continued to the upside. I getting the idea. So that whole space in between where price fails to come back to fill, that's your fair value gap. Do you understand? So if you want to use this to trade now, you more or less look at it that price will come back eventually to fill this level. Then you look to buy at that level and then continue the whole price movement to the upside. Are you getting the idea? So now, like I was saying, if we had a downtrend and then we had like a fair value gap in that whole move to the downside, the whole idea there or the whole thinking there is that price will come back up, fill that level, and then continue to the downside. Can I use? Yes, you can use it as a zone. We're actually using it as a zone. And before I started talking about it, I said that you actually use it in form of zones. Do you understand? That's the thing. There's nothing big about it. You use it as a zone. When I say use it as a zone, you're basically using it to jump on your trades. Do you understand? And then you don't use it standalone. You have to first of all factor in market structure. Do you understand? So if I come to my chart and then I see an uptrend where price is creating a series of like higher highs, higher lows, higher high. Do you understand? Now, if price creates a higher high, now I'm waiting for a retracement. But then if I'm using fair value gaps too as my strategy, what I'll be looking at now is, do I have any fair value gap in this push to the upside? Now, if there's any fair value gap, I'll look to highlight that fair value gap, wait for price to come back, fill that level, that's come back to tap that level, then I look to buy and then follow price movement to the upside. Do you guys get the idea? Are you guys getting the idea? Please, if you're following, you can just drop an emoji or yes in the comments so I know you guys are with me. Now, Another thing I would like to talk about is there are certain cases where you would have more than one fair value gap in one move. Do you understand? So in the case of like here, yeah, this level where I highlighted here, you'd see that we got a couple of fair value gaps also. We got a couple of fair value gaps here. So we got this first one here that I highlighted, this one around here. And then if you look at it, you see that we got another fair value gap here. There was one in between there again. That price actually came back to like tap inside. Now, in times when we have multiple fair value gaps like this, you always use the one that is, in the case of a downtrend now, the one that is actually like above. Do you understand? Or one thing you can look to do is more or less look at, you can tweak your Fibonacci retracement tool. So, one sec. Normally, if you draw your Fibonacci retracement tool, if you've edited it to be using 0.618 to trade, this is what it's going to look like. But then what you can do to your Fibonacci is go and then edit it. One sec. Go and then edit it. Let me try editing my Fib. Oh, one sec. I think the network is slightly bad. Why is it not loading? Someone is making noise. So you can tweak your Fibonacci to look like this. Let me see. There was this time I was using it. It's using something like that. Let me see. 50. Good. You can tweak your Fibonacci to have just one 0.5 and then the zero. So what you can look to do is whenever you have multiple fair value gaps, let's say we got a fair value gap down here. Let me delete this, move to the downside. And then we got another fair value gap, maybe slightly up here. What you can do is use that type of Fibonacci. Do you understand? Plot it from the top to like the bottom. And then look to use the Fibonacci above the 0.5 level. Now, above the 0.5 is more or less like half of that range. Do you understand? So it's more or less at a better price level. Do you understand? Now, if you have, let's say, for an uptrend now, that will be you plotting your Fibonacci first of all from the low to the high, and then looking to use any fair value gaps or the fair value gap below the 0.5 level. Are you guys getting the idea? So when you have multiple fair value gaps, use the one below the 0.5 level in the case of an uptrend or above the 0.5 level in the case of a downtrend. Are you guys getting the idea? Do you guys have any questions before we jump on our chart and then start looking at examples? Any questions before we start looking at examples? So now, if we look at this, you see that this market was actually in an uptrend. Price created like a higher high here, higher low, then another higher high. Now, if you look at this range, you see that we still got multiple fair value gaps. We got this one here. And then the last one we had was this one here, around here like this, somewhere around here. Do you understand? So like we said, the one we'll be looking to use will be what? The second one. So we'll be looking at price coming down. We'll be looking at price coming down, tapping this level, and then buying from here to what? The upside. So let's see how this one also played out. Let me map it out. We look to buy around here. Let's just say stop loss a few pips below, and then we target the highs somewhere up here. So the moment price taps into that fair value gap, that's where we'll be looking to buy. Do you understand? And then we'll look to more or less follow price up for it to create another higher high. So let's see how it played out. It actually went up to like create another higher high. Are you guys getting the idea? So when you're using fair value gaps to trade, it's more or less like zones. Do you understand? And I think where people start having issues with this thing, even when I first started trading, where I was having issues with this thing was not knowing how to basically use it, like how to place it. Do you understand? So you'd more or less come to your chart and then start finding fair value gaps. Do you understand? Without considering the trend. Do you understand? So first of all, identify the trend. Now, if price creates a higher high, look at the whole impulsive move and see if you had fair value gaps in between. Now, once you see a fair value gap, you look at price coming back to retest that level and then continue to the upside. Now, if price doesn't come back to your fair value gap, fine. Do you understand? But your what you're more or less looking at as a trader that uses fair value gaps to trade is that price will come inside. And once it comes inside, I'll be looking to execute my trade. Are you guys getting the idea? Now, someone is asking the question in the whole chat section. I am going to look into your question. For now, let's finish this. You get. Now, let's see if we can get a downtrend example. Then we'll call it an evening. Most of this market was pushing up. The times where we had like downtrends, they were not really clear. Mm, mm. See if we got it. This one actually reacted at a fair value gap, but then we had like multiple above that price did not push up to react at. So let me show you guys what I mean. So if you look at this whole sell to the downside here, and I think this is where the whole idea of looking at multiple fair value gaps starts to a certain level failing. So we got a fair value gap here. It was, first of all, this market was a downtrend. Now we got a fair value gap here. We got another fair value gap here. We got, okay, I think that's the last fair value gap we have in this range here. Now, if you look at what price did, price actually came back. Okay, let's see. Tapped into this fair value gap. And if you look at it, that's where it actually sold from. Like it did not go back up to like tap that fair value gap at the top. It stopped here and then sold to the downside. So I think from looking at this thing from this perspective, yeah, even when I was back testing this thing so that I'll come to like show you guys or teach you guys, I think to a certain level, you can decide to use the whole principle of price going back to tap the second one. Do you understand? Or you can look to use entry confirmations before jumping on your trades. So whenever I have fair value gaps or multiple fair value gaps, you actually go to the lower time frame. Whenever price taps the fair value gap, go to the lower time frame and then look for an entry confirmation, either a candlestick confirmation or a market structure confirmation before you actually jump on it. Are you guys getting the idea? So I think that's one thing you can look to incorporate. So all these things I'm telling you guys are more or less my perspective of this whole fair value gap, and then from what I've learned, and then what I learned from my mentors when I first started trading. Now, I am not saying you should follow this thing. How will I put it? Rule for rule, or like follow it exactly. But then you can look to back test it and then see if it's something that works for you or works with the type of trader you are. Then fine, you can look to incorporate it. Are you guys getting the idea? So now that's been said, first of all, we'll be looking at questions. If you guys have any question regarding this, I can look to answer them. Do you understand? Or if you don't have any question regarding this, and if you have a question on any other topic, you can look to ask and then we answer them and then we call it an evening. We just have like 8 minutes left. So someone already asked in the whole comments that can I use the 5 minutes as my fib zone and the 15 minutes as my directional? Even for a scalper, that's like really, really small. I would say the lowest time frame you should use. Well, to a certain level, it will work. Do you understand? But then that would be like really, really strong scalping because the 15 minutes time frame to a certain level will tend to change very, very fast. Do you understand? You'll have a lot of uptrends, downtrends, and then ranges on the 15 minutes time frame. A lot like in one, let's say in one day, you can have the 15 minutes change more than like 10 times or to 20 times. Do you understand? So it's going to be hard to keep up. You can decide to use the 1 hour time frame. That would actually work. Is there any other question before we call it an evening? Okay, like I said, it's not like it won't work because I personally have used like the 15 minutes for directional and then the 5 minutes and then 1 minute for like my zones and then entry confirmations. Do you understand? I've used it before and it works. Do you get? But then it's that whole idea of you keeping up with it. I think that's where the problem comes from. Any other question before we call it an evening? Now, there might be some people that to a certain level they don't really understand the concept to the point of asking questions. What I would advise is you can look to watch the video. I'll be sending the video later to the community. And if you are not in the community, let me drop the link so that you guys can look to join. Now, watch the video again and then look to see where you're having issues with understanding it. Now, write them down and then come back to the community and then ask. I'm always there to answer questions. So ask and then we'll answer these questions, or we host another session and then talk about them. So I just dropped the link to the community. If you're not on it, you can look to join. Yeah. And then in the absence of any other thing, we'll call this whole session an evening. Yeah. You guys should have a very wonderful trading week ahead. And I just wish you guys a peaceful week. Take care, guys.